Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 6th of December, 2018, just after 4:40 p.m. Central Standard Time. You know, you woke up, the market, as you know, in the stock market was closed, and in the interest rate sectors yesterday was closed for remembrance of George H.W. Bush. Today they reopened. You crashed almost 800 points in the Dow. You went down, and while you were down 10, you were down about 80 points in the S&P. I can go on and on. You're 200 points almost off the low in the NASDAQ. Maybe this is where the FANG stocks are going to be able to finally get some traction back to the upside. But what really happened were several events. One event had to do with the arrest in Canada of the, I think it's pronounced UE Corporation. It's the founding daughter. She's on the board and CFO of this monster company. It's a telecom company, one of the largest phone manufacturers also in the world. The U.S. thinks that they broke the sanctions we had on Iran, and they asked Canada to arrest her. They're bringing her back. The second thing that's going on now is the market is really doubting the Fed. They are wondering if the Fed is going to go ahead with as many interest rate hikes and when those hikes are going to be. And the reason is the marketplace. You saw the 10-year yield fell back to 2.85% today. You know, if you go to my tapes in September, October, we were talking where you're going to go to 3.25%, 3.5% by year end. Now you're back to 2.85%, a complete reversal. And even every day, the probability on a December rate hike is slipping. It's still in the 70s, but it was 90% and it's slipping away. And now the market is just pricing in for next year, maybe one hike. And there's talk today that maybe the Fed won't even do a hike in December, and instead it'll do it in January, since every meeting going forward on the Fed has a press conference after it. Just giving you what's there. Energy's down hard today as well. Is OPEC going to be able to do a deal? Is it a 1 million barrel, a 1.3 million? Is Russia going to join in and not join in? Nobody knows. I've not seen an OPEC meeting end this way, by the way, where all of a sudden there's no press conference at all. They're waiting to talk to Russia. If you get my market reports, what have I told you? The de facto leader became Russia in OPEC. The Saudis need them so bad that Saudi has given that up. That's what I think is going on. You'll argue it. I don't think I'm wrong. Weekly area chart of closes, you're still very much making those lower highs, lower lows. Now, this is where the market closed at 26.76 at the end of the year. So we're still above that, but barely. What are we up? 15 points from there. Wow. When we take a look at the Fibonacci study, I want you to look at this. This was the high we made in October and the low in October. Look at the size of that move. What we did is we had a rally that carried up to the second level. Fibonacci works in bands. So the first level of retracement, once you establish a low and a high, is typically around 38%, then a 50% retracement, 62. We fell back. This low did not take out that one. So what I said to you was, I still think the Fibonacci's in play, and I still do. You can take out with this low, and you haven't changed, in my opinion, where the Fibonacci is. Notice it failed again. And did we not just say it had to get over that level on a close in order to say something else? Maybe that's Santa rally. Now we'll have to see how the market restructures. When I look at the action, they counted, the CME group counts yesterday's action as a full trading day. The market on Wednesday for George H.W. Bush closed, as you know, on Wednesday's trade, but they stayed open from Tuesday night until 8:30 in the morning Wednesday, then they closed. They used that as a trading day. Today's altogether different. Therefore, my work says I have a pattern of lower highs, lower lows, bearish. To negate the bear trend, you've got to take out 27, 20, 75. Now let's put on some moving averages. The battle was fought 2 days at the 18-day average, lost today. Above it, we have the 200-day and the 100-day average. So I have a resistance point at the 18-day average at 2707.15. I want to know where the pros might have taken money off the table. Since there's no moving average, I go to a couple of things. One of them is a window envelope. If you've not known what those are, I teach them in my charting course, and I use them very aggressively. And Bollinger Bands, a very common algorithm designed to keep the market trading within it 95% of the time. You tell me what the market went down to today. You tell me where the support came in. If you can't see it, I give up. You slid right through it by 2 points, and from there you came roaring back to the upside. I'm going to repeat what I said. I think that the first time you hit a Bollinger Band, and I don't care if the market ends up hitting it there and then it collapses, I think that's where pros take off some of their positions. Could be a lot, could be all, but I don't think they don't do anything. All right, that doesn't mean I'm right, doesn't mean every pro trades the same way, but I'm going to talk in the generality. So I looked today and I turned to my office and I said, be careful guys, you're right at a point where this market can get traction. That is where the pros are going to come out. So now what you have is a market that's got downside momentum. It had a heck of a bounce. It's still under the 18-day average. I think the battleground's going to be at that 18-day average, and if you clear 27.2075, you come out of the downtrend that you've got in place at this point. But you've hit the downtrend target. The NASDAQ couldn't even make it to that number. The NASDAQ came back and closed over the 18-day average, so even though the trend is down with lower highs, lower lows, and momentum's down, the bias is up. You have nothing. You have a battleground of 3 days of the 18-day average of closes. We know this, and the Russell were the leaders to the downside, so maybe they're telling us a story that there's not as much down in them left as had the market priced in on that huge break. When we come to the Dow, you again got under a gain for the year today and then came roaring back. You closed at 24,907, still well under the 18-day average. You made a run for the lower Bollinger Band, didn't quite hit it. Missing it is missing it. There were other numbers in there, but that was the zone. And now the question is, can you get back over 25,190 or not? Part of what I think is lifting the market is the market's believing that interest rates are not going to get as high as people might have feared. I don't know if that's right or wrong. If the Fed is data dependent, every report that came out today was bullish. It continues to be. We have an employment number tomorrow. You've got to pay attention to it. The Fed is data dependent. Is it going to be a strong report? It's expected to be. We have lower highs, lower lows. Here you hit that lower Bollinger Band, 1460, and you finished off 1475. I'm going to say that I think the pros took some money off the table there. And again, if you took out 1494.40, be careful. You may then, on all these markets, taking out those high, begin what I'll call that Santa Claus rush. For those of you that do get my morning subscriber video, my subscriber videos for my paid subscribers, I was telling you I was expecting the pros were going to sell calls into that upper Bollinger Band. I think they did. Now we'll see where they come out. Often if you get there, you pull back to the 18-day average. If you get down to it, and it hasn't done it in a while, but it did it here, you eventually come back. But selling and buying calls or using options, your enemy's time, and I think you realize that. The advantage is you can cut down risk if you're a purchaser. But again, you're paying for time. Always remember that. And I don't give you recommendations here. I'm just telling you what I'm seeing on a chart. In the bond market, you have your embedded reading. When you get an embedded reading, I will stand by what I say. Until it's lost, the pros are in control on the long side. Now, you are 2 days in a row over that upper Bollinger Band. Typically, the most you go is 5. Each day, when it's successively over that upper Bollinger Band, come on, get it together, Ira, I count as one of those percentage points. But the fact that it's so strong is very powerful, so that the corrections that happen doesn't mean it's going to go into a bear trend. And as you can see, you'd have to take out 139.14 right now to break the pattern of higher highs, higher lows. And this 18-day average is going to jump tonight. And as it jumps, it's going to get over that number. So still in a good position. At any point, you can get a correction. To me, the key will be the slow stochastic, the same in the 10-year note. You've hit your upside targets. There's no reason it can't pull back at any point, but you've got a bull market here which says interest rates, no, they're not going up. TLT, same thing. So all of these currently have that. Now, TLT is a little different pattern. We've got both numbers today over 80. Let me come back and see if I can get this to even do it what I want it to do. It might. Whoops. Let's see if I can get this back. It's not going to let me do what I want. Oh, there it is. Yeah. Both numbers were over 80. Yesterday, both numbers were over 80. The day before, they weren't. So you don't have 3 days in a row. This is an overbought market that might want to reach back into this area to see what's down there in the terms of support. Being over the upper Bollinger Band, nah, you stay 95% of the time within those bands. Dollar index is continuing a pattern of lower highs. It's got the lower lows. The key now with the big reversal down today, and it took out yesterday's high and low, is if today's high is taken out, that portends a move to the upper Bollinger Band. As long as it's not taken out, in play is both the 18-day average to trade around it and possibly getting down to the lower Bollinger Band. Momentum has turned down. The flip-flops occurring in the eurocurrency. You've got the higher lows, higher highs. You did not have an outside day. You break that trend by getting under 113.21. Momentum is flat. It did not pick up. The bias is up. This market needs to pick up and run if it's going to be able to add to these gains. By losing the embedded reading, that's what looks like an embedded reading, a bearish one. Both numbers in the slow stochastic laying down. When lost, I look for the 18-day average or the closest of a major moving average to be hit. That number was 128.21. You hit 128.17 today. I will not be surprised tomorrow to see the 18-day average drop and prices still hit that. In the yen, you got up to the upper Bollinger Band first time. What would I be telling you? If I was your advisor, and by the way, if any of you need an advisor, I do hire myself out on a consulting basis to work with people. All you got to do is ask my staff. They'll get hold of me, and I'll have a one-on-one conversation with you. Higher lows, higher highs, into the upper Bollinger Band. I think the pros are taking money off the table against that number. The trend is up. It's not overbought. You'd have to take out 88.38 to break the trend. Support's back at the 18-day average of closes. In Bitcoin, as long as you have this embedded reading, I see this market still going down. I know Bloomberg contacted me today already to do a Bitcoin TikTok review for them. I'll probably get it done for them next week. But you've got the lower highs, the lower lows. It still looks to me, and no reason why this market can't wash out under the 3,000 level. I will take that back and change my attitude because it's an outside day down if today's high is taken out on Friday or Monday. Barring that, I'm still looking for lower prices. WTI versus Brent. Look at how the spread has narrowed in from roughly the 10.15, 10.20 area. Now you're down to $8.36, and nobody knows what's going on with OPEC. What you have on the chart pattern is a lower low, higher high. You lost the embedded reading, which often leads to price and the 18-day average coming together. I would be wrong in that analysis if you go back and you take out this low of 57.78. Until that's taken out, I still think that possibility is there. You did it in the WTI already. It's hit its upside target, unlike Brent. You did it in the Rebob gasoline. You hit that price yesterday. So those objectives, when you lost the embedded reading, have been made. Now you got markets with lower lows, higher highs, nothing there. And in that gas, you're back into a downtrend. You heard me, a downtrend. Lower highs, lower lows. I don't know where this one will end. It would end that trend if you were to take out right here the 448.90. Barring that, this Bollinger Band's going to climb. It might become one of the downside correction targets. You know, I had told you I'd put together the Arun indicator for you, and I've done it. So now we've got it ready for you to learn from. And what the beauty of Arun is this indicator gives you an idea of price versus time. and it looks at the last time either highs or lows were made, and you're using, I believe, in the scale of 25, the typical way it was created for. And then what we teach you to do is how to plot it and put it on your charts, and how to read what these numbers are. The key numbers are the green and the red. Then there's scales of 70 to 30 in there. And you apply it, and what you're looking for is confirmation of what? That a new trend is set in, and that the trend is staying in place. That's what it's used for. How do you learn to work with it and so on? Well, one of the things I did and do is I'll teach you my concept of it. Give my staff a call. We have put together our video series. They're ready to come out. You can go to our website. You'll see, if you sign up for any of our free offers, you're going to see the Aruna indicator. We'll make sure you get the link. My brokers can send it to you as well. Or you can click up here if you're seeing this. That on some of the YouTubes will take you right to our sign-up page, and away you go. I'm Ira Epstein. Sorry for being so lengthy, but there was a lot to talk about. Talk to you tomorrow.